Germany's economy shrank by 1.7% in the first quarter of 2023, after growing 0.5% in the previous quarter. This was the worst performance since the second quarter of 2020, when the pandemic hit hard. What caused this contraction and what does it mean for the Eurozone economy? The main reason for the decline was the lockdown measures that were imposed in January and February to contain the third wave of COVID-19 infections. These measures affected consumer spending, which fell by 3.2%, and services, which dropped by 4.7%. The hospitality, tourism and entertainment sectors were particularly hit hard by the restrictions. Another factor that contributed to the slump was the disruption in global supply chains, which affected Germany's exports of cars and machinery. The shortage of semiconductors, which are essential for many electronic devices, caused delays and cancellations in production and delivery. Exports fell by 1.2%, while imports rose by 4%, resulting in a negative trade balance. The only bright spot in Germany's economy was the construction sector, which grew by 1.8%, thanks to the mild winter weather and the low interest rates that stimulated housing demand. However, this was not enough to offset the losses in other sectors. The contraction of Germany's economy had a negative impact on the Eurozone economy as a whole, which shrank by 0.6% in the first quarter of 2023. Germany is the largest and most influential member of the currency union, accounting for about a quarter of its GDP and trade. Its weakness dragged down the growth prospects of its neighbors, especially France and Italy, which also contracted by 0.4% and 0.7% respectively. The outlook for the second quarter of 2023 is more optimistic, as Germany and other Eurozone countries have eased their lockdown measures and ramped up their vaccination campaigns. However, there are still risks and uncertainties, such as the emergence of new variants of the virus, the slow recovery of global demand and trade, and the political tensions within the Union over fiscal and monetary policies. In conclusion, Germany's economy shrank by 1.7% in the first quarter of 2023, after growing 0.5% in the previous quarter. This was due to the lockdown measures, the supply chain disruptions and the negative trade balance. This had a negative impact on the Eurozone economy, which also contracted by 0.6%. The second quarter of 2023 may see some improvement, but there are still challenges ahead. One of the main factors that dragged down the Eurozone economy in the first quarter of 2021 was Germany's stagnation. The largest economy in the region barely grew by 0.1% compared to the previous quarter, while other countries like France and Italy contracted. Germany's stagnation was mainly driven by a decline in government and household consumption due to the prolonged lockdowns and restrictions amid the COVID-19 pandemic. The government spending fell by 1.2%, while private consumption dropped by 5.4%. These two components account for more than 80% of Germany's GDP, so their decline had a significant impact on the overall economic performance. The lockdowns and restrictions also affected other sectors of the economy, such as services, trade and tourism. The services sector shrank by 4.3%, while exports and imports decreased by 1.2% and 1.9%, respectively. The tourism industry suffered a sharp decline of 56.4%, as travel bans and quarantine measures discouraged both domestic and foreign visitors. The only bright spot in Germany's economy was the industrial sector, which grew by 2.5% thanks to the strong global demand for German goods, especially from China and the US. However, this was not enough to offset the negative effects of the consumption decline and the pandemic-related disruptions. In conclusion, Germany's stagnation in the first quarter of 2021 was mainly caused by a fall in government and household spending due to the COVID-19 crisis. This had a negative impact on the Eurozone economy as a whole, as Germany accounts for almost a third of its GDP. Germany's export-oriented industry was also affected by the global supply chain disruptions and the slowdown of the EU economy. Germany is the world's largest exporter after China and the USA, with cars, machinery, chemical goods, electronic products and pharmaceuticals being its top exports. However, due to the pandemic and the war in Ukraine, Germany faced difficulties in producing and delivering its goods to its main trading partners, such as the USA, China and France. Global supply chain disruptions are caused by various factors, such as difficulties in the logistics and transportation sector, semiconductor shortages, pandemic-related restrictions on economic activity, and labor shortages. These factors result in delays, higher costs and lower quality of products. For example, German carmakers had to reduce their production due to the lack of microchips, which are essential for modern vehicles. Similarly, German manufacturers of machinery and equipment faced challenges in sourcing raw materials and components from abroad. The global supply chain disruptions have a negative impact on Germany's economic growth, trade balance and inflation. According to the OECD, Germany's GDP growth forecast for 2022 has been revised down from 2.9% to 1.2%, while its exports are expected to grow by only 1.8%, compared to 8.7% in 2021. The supply chain disruptions also contribute to higher inflation, as producers pass on their increased costs to consumers. In November 2021, Germany's annual inflation rate reached 6%, the highest level since 1993, 10. To mitigate the effects of the supply chain disruptions and build resilience for the future, German companies need to adopt various strategies, such as diversifying their suppliers and markets, increasing their inventory levels, investing in digitalization and automation, and collaborating with other stakeholders in their supply chains, 10. These strategies can help them reduce their dependence on risky sources, improve their efficiency and flexibility, and enhance their competitiveness in the global market.